make you feel good because you had a good time today, and maybe you learned something yesterday too with the other live session. But I showed you what it looks like. I showed you how you go into the marketplace and you read it. And I'm going to leave it up to you, the viewers, to decide whether or not if these things work. Okay? You don't need me holding your hand. The worst thing that I could do is sit down with you just a few times a week or even once a week. That would create such a codependency on me that it would not help you. And to be quite honest with you, I knew as soon as I did this, I would get complaints and emails and things. We need you to help us take live trades. We want you to do that. You're being selfish. You're being ignorant. You are, self-centered because you won't tell us when to get in, when to get out. Folks, I didn't do this for that type of feedback, okay? I only promised I would show you that I could show you the things before it happens. That way you can see what it looks like. And there's nothing that's required, to trick anybody. I mean, either it's going to work or it's not going to work. But you have to be in front of the charts doing these types of things. And failing is part of that. That's how you learn. These are opportunities to grow from that. So anyway, I think that is it. I want to go back up to the 15-minute time frame and talk a little bit about this area up here. That gap, I think that is where we're going to be drawing up into, because this is, in my opinion, not going to be left open. Okay, so they're going to want to trade back up into that. There's missing data here. Okay, there's an actual gap. So it'll want to draw up into that. And to what price level? I'd like the low on that candle. Okay, so if it was going to be a perfect delivery, it would go right to that candle's low. But I'm not expecting perfect. I'm not suggesting that at all. But if we go above this area, that means we're probably going to go into a deeper run on the daily. And take everything off here. So we're likely to run this high here, and we have one more block there. So the low at 4,000. So it's something to consider and watch going forward for the rest of the week. I may be wrong, but it's just something for you to go into your charts and start studying and looking for. I think I have one bit of business. Let's go back into. Let's go into a 5-minute chart. All right. I was watching Hannah on her YouTube channel, and I don't know exactly offhand what market was. I want to say it was Australian dollar, maybe it was Canadian dollar, but it was a forex pair. I don't need to have that on the chart to explain what I saw her doing. And some of my students, when they first come in to the fold, they do this type of thing too. They will look at a range like this, like here to here, and they'll measure that range, low to high, to find the 50% level, and then use that over here for a discount. That's not how we do it, okay? If we are looking for a short, in Hannah's example, she was looking for a short, you want to look at the price leg that drops, and this is going to be the reverse of that. Okay, so this might be a little confusing, but just reverse the logic and you'll understand. I'm sure Hannah will follow along. So from the low here up to this high here, if we're looking for a long to get above these relative equal highs, or use that 39.53 level I was calling for, or making reference to this morning, this low up to this high, this is what you'd be doing. Okay, so if you're looking for it to go higher, you're going to need to draw your fib from a low up to a high. That dealing range from that low to that high, we're waiting for an anticipated retracement. So the retracement's going down to and below 50%. Now this becomes what? A discount. So you can be hunting along at this level or less. If we're into a fair value gap, that's good. Okay. The same thing is done here. If we're looking, because it has not taken this out here yet, just fell short of it. So if we take the fib and just anchor it to that high and run it to here, You can see here's 50% of this dealing range low, this dealing range high, and it drops down to a discount. Okay, you're looking at expansion swings, okay, or impulsive price swings in the direction you're trying to trade. You don't want to use a price leg from high to low measuring something that you're trying to go long on, but you don't want that. You want to be using the impulsive price swings that go in the direction you're trading. Then it retraces down in below 50% or at it into a fair value gap. Then you can probe that as a long and it rallies up. So I just want to kind of clarify that. I wasn't sure if she was aware of what she was doing, but if she wasn't aware of that, now she knows. So that way, all of you had the benefit of learning through her interactive study, which I'm absolutely loving. I'm loving it. I wish more of you would do it, and as long as I had time to sit down. Usually it's on the weekends that I get a chance to catch up to stuff like that. But I'm loving the Thailand vibe. I'm loving the boo-boo kits and not so much the food poisoning. Ugh, sorry for that. But hopefully this has been insightful to you, Hannah. Hopefully everyone else has got something from this as well. And I'm sure I'll be back again, Lord willing, on Thursday. And until then, be safe. All right, folks, welcome back. So, Lord willing, after the holiday weekend, I'll be back next Tuesday. So here we have the E-mini S&P daily chart, and you can see we had a nice delivery to the upside. Initial draw was inside this area in here, up into the bearish order block. Now notice that we traded up into this up close candle with today's range. Didn't quite take out this high. I think that's the next area to look for. But in here, when we're looking at a candle that we're using for like an order block, the low, the open, in the middle of the range, those are the three sensitive areas that you're watching for. If the market trades up into the middle point of that candle, this is what I call the mean threshold. Mean threshold was taken today, and that to me bodes well for a continuation to take out this short-term high. So if you take your fib and you run it across this candle, the 50% level, right here's the 50-minute time frame. Here's yesterday's trading. Trade up into that small little area down here, into that low. I mentioned that was going to be a likely candidate for upside relative equal highs as well. We traded back down into a fair value gap. Optimal trade entry. Rallies up, takes out buy side liquidity above the short-term high back here, which I don't unfortunately have in my chart, but you can see that on your own 50-minute time frame. And then we consolidated ahead of today, and then during the crossover into New York midnight, has a small little Judas swing where it drops down, creates the low of the day, rallies, leaves relative equal highs in here, and this high intact. It drops down, rallies once more, small little retracement, and then it does a shallow run above 4,000 on this pass through here. In this small little area on the lower time frame, I used this little retracement to highlight a run to 4,000, because I gave you guys 4,000 was my objective. It hit it, and then we pressed deeper into the order block on the daily chart, which creates this whole run here. Now I'm going to go into the details about that here, but for now, just know that we were trading up to this level, failed to go to that same level, consolidated right below that daily bearish order block. That's the low of the candle that creates that daily bearish order block. And then the opening, when that candle's a little bit higher, I think it's 4,002. But don't hold me to it, look at your own chart. So we had a small little pass above 4,000, retraces back down in. We'll look at the lower time frames and all of this price action now. Into the 5-minute candle. This run here to here. This price leg is part of this price leg. Okay. Notice how this candle's high to this candle's low. That range, okay, that range right there has one single pass. Whereas this one has 1, 2. Notice that? low, high, small order retracement, and then a second level running. Because it had 2 stages to this delivery, I want to use this most recent one, and this is my dealing range. The short-term low, the short-term high. I run a fib on that, and I showed this in a short little vignette I posted on my Twitter. By the way, the Twitter handle is I am the ICT. Okay, so it's at symbol capital I underscore AM underscore THE underscore ICT. Okay, there's a lot of people over there pretending to be me, and maybe they're just, I don't know if it's fanfare or what it is, but some of them have been asking for money. I'm not asking you for money, and I'm never going to ask you to DM me. I'm never going to DM you. Okay, so if it ain't being posted publicly on Twitter, it isn't me. Okay, so this dealing range here, I measured the low to the high. 50% is equilibrium. I want to see it drop down into discount. This small little area down here, fair value gap. We want to look at that on the lower time frame. So from this run here to here, I know some of you are going to ask, some of them were bringing it up today on Twitter. What about the times you said for the model? Teaching you something that is outside of the model as the reasons why you're not going to anticipate or see that typical setup. That's the whole point of why I did it today. Plus, I have a lot of personal things I take care of and administrative work in my private group. So, with that said, the market rallies in here, drops down in to the fair value gap there. Once more above the 4,000 level, and then going into, here's 830 by the way. This is the 830 candle, and you can watch when it trades right into that fair value gap. It rallies again, drops back down in, and then at 9:30, this candle here explodes to the upside, takes off, and starts digging deeper into that. All right, so it traded up into almost the 4,074 level, looks like almost. So we'll be looking for a continuation to the upside, 4,095. 4,100 is next consideration. I want to take you into the price action down in here and give you more details as to why I was willing to take something a little bit earlier today. Okay, if you plot the NASDAQ June contract for 2022, and on the compare chart on TradingView, if you go up into your TradingView platform, you'll see like a little plus symbol up here. If you click on that, it'll give you an opportunity to add another instrument. And you add this symbol here, NQM2022.